All right, let's jump right in. If you've spent any time in crypto, you know the market is this wild, nonstop beast. So today, we're going to demystify one of the most powerful tools you can use to tame it, automated trading bots. And we're going to focus specifically on how they work on the KuCoin exchange. Let's do this.
And I mean that literally. Unlike the stock market that has opening and closing bells, crypto is always on. Prices are moving, opportunities are popping up and then vanishing every single second of every single day.
Just let that sink in for a moment. 24 hours a day, 7 days a week, 365 days a year. No weekends off, no holidays. It's this relentless machine, and there's just no way a human being can keep track of it all manually. I don't care how much coffee you drink.
Right? It's the big question. You've got to sleep. You have a life to live. So how do you possibly stay on top of everything without being permanently glued to a screen? How do you catch that perfect trade that happens at 3 a.m. your time?
Well, this is where our hero enters the scene. Automation. Trading bots are the answer to this whole 24/7 problem. Think of them as your tireless assistants, always on the clock, always watching the market for you.
So what exactly are they? A crypto trading bot is basically just a piece of software that you set up with this specific strategy. You tell it what to do, what to look for, and then it connects to the exchange and automatically places buy and sell orders based on those rules you gave it. It does all the tedious watching and waiting so you don't have to.
And the way they work is actually brilliantly simple. The bot is just constantly scanning all the market data. The second the conditions match the rules you've set, like say a certain price is hit, bam, it executes the trade for you instantly. It's a totally disciplined, emotion-free way to trade.
Okay, so let's zoom in on KuCoin, because they've built a really fantastic ecosystem for this stuff. When you're looking at automating your trades on their platform, you basically have two main paths you can go down.
On one side, you've got the trading bots that KuCoin has built right into their exchange. They're native to the platform. And on the other side, you've got the option to connect external, third-party bots using what's called an API key. You can think of an API key as a secure password that lets another program trade on your account without ever knowing your login details. So let's talk about KuCoin's own bots first. What's the biggest advantage here? Well, for starters, they are completely free to use, zero subscription fees. They are also surprisingly powerful, super easy to get started with if you're a beginner, and they even let you copy the exact strategies of other successful traders with just a click.
So, why would anyone ever pay for a third-party bot?
Well, it all comes down to one word: customization. If you want to build really complex strategies based on, say, specific technical indicators, or maybe you want to manage bots across a bunch of different exchanges, all from one dashboard, then a third-party service is probably the way to go. They often offer really unique features you just won't find anywhere else.
And this gives you a great snapshot of what's out there. You have platforms like Bitsgap, which is awesome if you want to trade on like 25 different exchanges at once. Then you've got CoinRule, which is famous for its super beginner-friendly, if this, then that style of building strategies. And of course, CryptoHopper, which is huge in the social trading scene. As you can see, they all have different pricing plans and really cater to different types of traders.
All right, so we've covered the what and the where. Now for the really important part, the how. Let's break down some of the most popular and, frankly, most effective bot strategies that you can put to work on KuCoin. First up, and probably the most popular, is grid trading. The whole idea here is to make money from the market's natural ups and downs, the volatility. It works best in markets that are kind of moving sideways or just bouncing around within a predictable range.
The logic is literally the oldest rule in trading: buy low, sell high. Imagine you're casting a big fishing net over a specific price range. The bot sets up a bunch of buy orders below the current price and a bunch of sell orders above it. As the price wiggles up and down through your grid, it automatically buys on the dips and sells on the rips, pocketing a small profit each time.
Now on KuCoin, you'll find two main flavors of this. The spot grid bot is trading the actual coins, and it's best when you think the price will either stay in a range or go up. The futures grid bot, though, is a bit more advanced. It can bet on the price going up or down, and it lets you use leverage, which can amplify your gains, but you gotta remember it can also amplify your losses.
Okay, next up, a totally different mindset: dollar cost averaging, or DCA for short. This strategy isn't about trying to time the market perfectly. Nope, it's about time in the market. It's all about creating a disciplined, automated investment plan.
So here's how simple it is. You just commit to investing a fixed amount, say $100, at a regular time, like every month. When the price is high, your $100 buys a little less of the coin. But when the price is low, that same $100 buys you more. Over time, this just smooths out your average entry price and really helps lower the risk of accidentally buying everything at the top.
So who is this for? Well, a DCA bot is absolutely perfect for long-term investors just looking to build up a position over time. It's also great for anyone with a lower risk tolerance or for beginners who are maybe a little intimidated by all the volatility and just want a simple, steady way in.
The last core strategy we're going to talk about is smart rebalancing. This one is for when you're holding a portfolio of different coins and you want to maintain a specific mix. For instance, maybe you always want your portfolio to be 50% Bitcoin and 50% Ethereum. This bot automates the discipline of keeping things in balance.
So how does the bot know when to rebalance? You've got two main choices. A time-based trigger will just rebalance your portfolio on a schedule you set, say every hour or once a day. A percentage-based trigger is a little different. It only kicks into action when one of your assets drifts from its target percentage by a certain amount, like 1%.
But here's a really interesting insight from an actual KuCoin bot user. This person said they found that a time-based trigger, like every 30 minutes or every hour, actually worked better for them. And why is that? Well, because it captures all those smaller, more frequent market swings that might not be big enough to set off a percentage-based rebalance, but still offer a tiny opportunity to lock in some profit. Pretty smart. Okay, so we've talked about the problem, we've talked about the different tools, and we've broken down the key strategies. Now, let's bring it all home. How do you actually choose the right bot and the right strategy for you? Here's a quick framework to help.
Whenever you're looking at a bot, doesn't matter if it's built in or from a third party, just run through this mental checklist. How's the security? Do they have two-factor authentication? Is the user interface easy to use or is it super complicated? What's it going to cost you? How much control do you have over the strategy? And maybe most importantly, does it let you backtest your idea on old data before you put any real money on the line? Answering these questions will point you in the right direction.
We've covered a ton of ground here, right? From the crazy 24/7 nature of crypto all the way to the nitty-gritty of grid, DCA, and rebalancing bots. The big takeaway is that these tools are all about making your trading more systematic, more disciplined, and honestly, a lot less stressful. So the final question is really for you. Now that you know the basics, which one of these automated approaches are you going to dive into first?